All right, let's get more reaction on these tech earnings. Bring in Fast Money friend and Loup Ventures founder Gene Munster. Gene, nice to see you again. Should Twitter be down this much, almost 10% at this point?
It should, Melissa. I'm in the camp that this is not a buy on this pullback. Respectfully to your esteemed traders, I ultimately think that this needed the greatest tail. We have the greatest ad tailwind coming for these social companies, 29% growth, as Tim mentioned. It's just subpar when we think of that compared to Facebook's 46, Google's 33%. What they want to do is really push forward engagement. And their mechanism, I think Dan had mentioned this in kind of the Twitter Spaces, that product. Unfortunately, there's already a product out there. Clubhouse is out there. They're getting a lot of traction. And I think that that goal of trying to increase engagement, and I absolutely agree with Guy's, I think he said his Muppet newsflash, that users aren't going to particularly be growing in this. That is, even though the miss was fractional, 0.5%, compare that to Facebook, that over the last 4 years has grown daily and monthly active users. Just like it moves at the strength and pace of a glacier at 8% to 10% every quarter. This is very different than Twitter. And I think with growth stories, you look for any sort of a slip up, and I think you have to ask some hard questions because of it. I think there's just better places to put your money.
Dan was making the case that if you take a look back on the chart, back to the spring or so, a while ago, the stock pulls back and then you buy it. Gene, I'm just wondering if at this point in time you think this is a reset of Twitter's valuation lower. Does it deserve to be lower based on what we heard today from the earnings?
It does deserve to be lower ultimately. In a growth companies, it's a very simple model that we have followed for almost 20 years, is that growth companies that deserve higher multiples, even though the multiples come down, it's still relatively high. Companies that grow need to be beating and accelerating revenue or maintaining revenue growth. And what we're seeing with Twitter is that's not the case. And so I think that it is justified, the pullback here. I think this is a great company to trade. I would be cautious about just owning this for the next 5 years. I think this is one to trade. Maybe you do trade it down here lower, but ultimately we anchor in more of a 3 to 5 year approach. And there's just not enough growth here, and the metrics aren't moving in the correct direction.
Hey, Gene, it's Karen. Thanks for coming on. I don't know if I'm jumping the gun here and want to talk about Amazon, but I just wondered how you get to, where you get to evaluation and how.
So I think that, you think about that growth story. We did get a read tonight on what Amazon believes that their kind of post-pandemic growth is going to be. It's the first of those reads. I'm going to answer your evaluation question in a second here. But if you take the June guidance and you apply a typical beat to it, it implies about 33% top-line growth. It's been 44 for the last 2 quarters. But if we go back to the quarter before the pandemic, December of 19, the business grew at 28%. In other words, is what we are seeing with Amazon is that they are indicating essentially growth slightly higher in line with what it was before the pandemic off of these very difficult comps. I think that is representative of a company that is really continue to step into this growth curve. E-commerce, as a reminder, different numbers are out there, but it's kind of somewhere between 20 and 27% of what is bought in the U.S. That still has a large way to go. I do beg a question here when it comes to Amazon and all of their growth. Where is the next big step in growth going to come from? Like, what is going to happen in retail over the next 5 years that we're going to be talking about? And I think what is happening with retail in the home is kind of going back through the door. Amazon leaves it at the door, going back through the door, I think is a huge opportunity you're going to hear more about.
Gene, the market can be extraordinarily fickle. Having done this for a while, it humbles me every day. But last quarter, I thought was, for Amazon, was as good, maybe slightly worse than this quarter, but it was an exceptional quarter. Stock traded up to 3,400 in the after hours, and a week and a half later, I think it had a 2,950 or 3,000 handle on it, for no apparent reason that I could ascertain. Obviously, a much different story now. What was I missing then that the market is seeing now?
I think what you're ultimately coming down to is what is the true growth rate? I mean, you've been covering this well this entire week. It's been the A topic. What is the true growth rate? I think what we're seeing here is maybe, in my view, it's that the growth rate is more sustainable. We look at the 5 big companies that have reported this week, and there's some pretty strong debate about which one of those companies are going to have sustainable growth. And so I think what maybe the market has missed, or I'm looking at from today going forward, I think Amazon is going to continue in this high 20, low percent growth, even up against these massive comps. And ultimately, what is the valuation, the correct valuation of that? I just believe it is higher than it is today at the 1.8 trillion.
Gene, always good to get your analysis. Thank you. Gene Munster of Loup Ventures. All right, so you have the earnings report, and that's one thing, and the stock reaction can be something entirely different. And we have seen very, very different reactions to very good earnings reports, I should say, the next day. And I'm thinking of, let's say, an Apple. Great quarter, solid quarter. Today, the action was meh, right? Facebook, great quarter, great action. Alphabet, great quarter, great price action. The list goes on, Guy. You can post a great quarter, but if you've got a high valuation, you tend not to do so well the next day in this environment.
Yeah, it's fascinating. And we talked about Apple last night. One of the comments I made is I thought Apple, given that quarter, my assumption was it should have been significantly higher. And I guess the longer it didn't sort of test that 145-ish level, the more it made you believe that maybe it was one of these good news, bad price action situation. To your other point, though, Facebook, I think it becomes sort of a math problem when you see some of the numbers they're putting up. So I don't know. Again, we've all been doing this a long time, and I will tell you, it never ceases to amaze me how sometimes the market reacts the way I think it should, and other times completely opposite. I will tell you that last quarter in Amazon is one of them, and clearly today in Apple is another.
Shepard Smith here. Thanks for watching CNBC on YouTube.